Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly Video for the 28th of February, 2020. And, all right, I feel like we got a broken script here, or a repetitive script. When the market, we'll talk about the Nasdaq at least, and the tech names, Apple being one of them, and the market itself made new all-time highs, technically over the holiday break on Monday, but still we'll go with that. And the market is at these little pivot points or push points into 9,600. It's a roundy. And we had volatility up and down in the Nasdaq, in the S&P, which had its little Monday all-time high, and a little push to the downside today. Today was a retracement taking us inside, or back with inside, the value area, or this chop zone of the high volume node. So the gravitational pull of the market is lower, and that's going to be the case in all these markets. The pull is like this, meaning when you're above the value area or the yellow line, sort of think about it in similar terms to weekly expected move. When you're at or above it, there is a pull to the downside. And that's what we're seeing in the markets right now. But you don't need me to tell you that the markets are overbought, overextended, and way into the stratospheric territory. And that is ripe with danger for the bulls. Right? Get your long positions are and throw caution to the wind. And that's the day the market pulls back 1 or 2% against you and loses money. But if you're a bear, well, you might get short and beared up today like we all want to do. But the next session, Wednesday, Thursday, Friday, pops us up to new all-time highs. So when we mention the word markets ripe with risk, it really is for both sides. The bulls have risk of a sudden vacuum or a little rapid liquidity move to the downside, some spike in volatility pushing us down to lower lows, and that would be roughly 3300 or lower pivots in the S&P. But the bears, well, try to short any one of these little pullbacks or little tops, if you will, and Monday was an all-time high. So that's where we are. In tonight's video, I want to talk first about the market, second about gold, bonds, and where those markets, or what those markets are telling us right now, because they are breaking out to new highs. Keep a watch on our S&P. On the daily chart, just taking us back to what we already know, we're extended. I would draw parallels or similarities to any number of these prior pullbacks in this rapid rally or nonstop creep rally. That each time we get way extended, the market has a snapback day. And there is your risk if you're a blind bull. You wake up and 2 days later, boom, the market's down 100 points against you. Or here, the market's down about 200 points against you. But if you're a blind bear, you get bared up in this pullback and the darn thing makes new all-time highs within a week or so later. So that's the dilemma that all of us are facing in the equity market. So maybe it's helpful to take a look outside the equity market. Let's do that. Let's first take a look at the bond market. So TLT is our proxy or an ETF if you want to trade it, swing trade it, create in-out spreads or vertical spreads with the bond market. In 2019, we had the bond market surge. New highs, higher lows, rising averages, all the bullish type of components when the equity market was relatively flat in that year, or at least that period. But at the end of the year, the market rallied and bonds came off the highs. I've been recommending bullish type of spreads or bullish type of option strategies or any type of long premium, especially call premium, off of these pivots. So roughly 136. We had a confirmation of a little trend line break about 139, 138, and that's led to the prior high at 145. We think bonds actually go higher towards and above 150. And if that's the case, that puts pressure under the equity market, which may be the thing we all want to see, which is a little pullback or maybe a crash type of pullback. And that is supported by rising bond prices. So we still think bonds have a little bit higher to go. And the precursor or the leader, the stronger market, if you will, similar logic, is and has been gold. Similar type of bullish activity in 2019, similar pullback or retracement in the later parts of the year, similar type of, really identical, bull strategies, bull calls, or just buying gold on the futures or options, and trading up toward any number of these prior highs. That in-out spread type of trade we've discussed has been successful, and so have these two pullbacks I've also discussed and recommended for short-term traders, that is. Gold keeps making higher highs because the trend is to the upside, and logic has it going even higher. That is the weekly chart. Yes, it's overextended. Yes, it's a big mover, but we can take a look at how that plays into, we do the time frame here. We'll go back to a monthly chart and we'll go further back. Just keep in mind, commodities can be a little bit more trendy, or can go a lot farther, faster, or more persistently than the stock market can. For example, in 2010, 2011, 2012, gold traded down to about 1,100 per ounce, peaked at 1,900. That's just shy of 2,000 if you remember those times. But it fell just as quickly, or took a little bit longer, but still. Not too long ago, gold was at 1,100 per ounce. Now it is trending up. So in the bigger picture of gold, I think it's an easy pathway to see 1,700 or 1,800, but that's into later 2020 or maybe 2021. We don't want to get that far ahead of ourselves in this market video, but the same can be said about the bond market. Strange rallies, persistent rallies up in the earlier part of the last decade, if you will, and the pushback to these lower levels. So 2019 has been a complete retracement of that down move in the last few years. And the Fed's behind this in part with the quantitative easing or different little programs with bond repurchases or interest rates, raising, lowering interest rates, etc. So the Fed does play into these markets, but still, this is what we have, what we're trading with. The ETF is a little bit different because of the way the fund is structured or rolled. So keep a little bit of a grain of salt when looking at these from the weekly or monthly perspectives. It's better to look at the futures markets for these plays or trades or pathways. Back to gold. And again, if this keeps happening, if gold keeps pushing up, that does put a little bit of a, let's say a little concern into the equity market. But that's what we're looking at here. So just the purpose of tonight's video, once again, taking a look at the broader picture. We still have this uptrend. We have the immediate future calling for a snap back, which means if you're going to be blindly bullish, you're at a little bit of a risk point right here, a little kind of pressure point for a pullback. That's why it's good to find these strongly trending stocks, Nvidia being one of them, Microsoft and Netflix and others, Amazon, Facebook even, and trading bullishly on pullbacks or retracements. And I like to use those moving averages. You do not want to short markets that are overextended. That's a great short. But the earnings play in Nvidia at the end of last week, that was a catalyst that sent the stock surging, but in the direction of the prevailing trend. And that's how I like to look at markets or stocks for opportunities for in-out spreads and verticals. Find something strong and expect it to get stronger. But you manage your risk by buying on the pullbacks. And when the market's that overextended, we don't have much for you and don't have much in terms of trades until we get the pullback. We don't want to short it because we never know when the market's going to blast off to new highs, and there's your risk as a bull. But as a bear, well, the market can do that as well. So as a bull, your risk is a pullback, snapback instantly like that. And if you are a bear, your risk is just persistent creep, even through a round number. So name of the game is caution. If stocks aren't doing it for you, there are other markets, other opportunities, and other ETFs. So don't think that we're all about the stock market. We'll have opportunities beyond that. And of course, option strategies like calls, puts, spreads, verticals, and in-outs, well, they'll work just as well in other markets. So if this is frustrating, it's lasted a while, lasted longer than most of us expect, could last longer, but there are plenty of opportunities elsewhere. As always, be careful and safe. This is Corey Rosenblum with your Theo Nightly Video for the 18th of February, 2020.